The names, okay, yes. So I hope we're appropriately organized here. Thank you for coming to ELEV8, formerly Crypto BlockCon. This is an awesome event here in Los Angeles, an event that I try not to miss. Just so you know, last year at this time, I was on a stage and we had an earthquake. So, you know, that's just something to be aware of. The earth is going to move today. So we're here today. We're going to talk about the return of the bull market, opportunities, strategies for investing in blockchain and digital assets in 2019. I'm going to let the rest of the panel kind of introduce themselves, tell us who they are, why they're here, why they're relevant. Does that make sense? So let's see, Jeremy, because he's right underneath his name. I still want to be Jenny. Can I be Jenny? You want to change? Go ahead, Jeremy.
Son? Hello? Yeah. So, Jeremy Musighi. I have been researching crypto since 2012. I started investing in 2013. In the meantime, I built a couple of startups, Revenue.com, which was an ad tech company that sold last year. I was a co-founder there. I was the founder of Sesh, which was the largest digital life coaching platform, which also sold last year. And I'm the chief investment officer at Immutable Capital. We invest in problem-solving crypto assets, and we advise leading organizations on implementing blockchain.
Awesome. And ladies and gentlemen, the man, the myth, the legend, Mr. Jim Dolbear.
So I work with David Schaum at Elixxir, and we have about 20 people now. Came out of stealth mode in Singapore in September, and we're founded on some breakthrough innovations that David came up with in about 2014 and led to an academic implementation in 2015-16, and then we founded Elixxir as a commercial entity and raised a bunch of money to deliver the technology really to consumers worldwide. And basically, concretely, what we're up to is, David did breakthrough work on mixed networks, and it underpins things like Tor and blind signatures and digital bearer certificates, which is the notion of electronic cash. He's thought of as the inventor of electronic cash.
Digicash.
Digicash. He was CEO of Digicash. And the problem with the mixed networks were they're very slow, if anyone is familiar with Tor. And so what he was grappling with is how can we deliver these technologies on the modern smartphone platform so that you could benefit from the technology in a seamless way. And what that concretely means is that you can handle transactions on a smartphone from beginning to end in a matter of seconds and do it without running down the battery on your smartphone and within the computing constraints of the smartphone on the client side. And that requires some fundamentally different things, including pre-computation of a mix so that basically a team of nodes is ready to process a transaction before the actual data is available, and also a different approach to the transfer of value, so or the achievement of a payment. And so Elixxir uses digital coins and basically transfers ownership, whereas, say, Bitcoin uses a public key signature to authorize a change in a ledger. And public key signatures are very involve big numbers and a lot of computing intensity, so it takes time. The bottom line, Elixxir is the first platform that we know of that has these performance characteristics. And it's our view that if people can't use the blockchain on their smartphone without experiencing real glitches and problems, it's never going to go mainstream. So that's our challenge, our vision, is to deliver that kind of performance so that people really can use it in real time. Get up in the morning, make payments, send messages, send data around on their smartphone with a blockchain backend.
Absolutely, and thanks for that explanation, Jim. David Chaum goes back to the cypherpunks with, Nick Green and Szabo and all those folks that gave us Satoshi Nakamoto and the Bitcoin, and he's been in it since forever and ever, and we're very excited to see what you're doing with Elixxir. And all this kind of moves into our topic for today, in return to the bull market and opportunities and strategies for investment in blockchain and digital assets. This thing called digital assets, right? What's a digital asset? Well, we're going to move into that very quickly. First thing we want to talk about is we're in the United States, so if we're doing digital assets, then there's this organization called the SEC. Everyone know about the SEC, who they are? Raise your hand. Yes, there we go. Everyone knows. We're all painfully aware. But they're giving us some guidance, and they're coming down with some guidance, and hopefully moving into 2019 is the year of the security token and digital assets. We can keep out of the problems that we had in 2017, 2018 in the ICO market where it was unregulated. Let's try and do this thing correctly. But I want to talk about the update of rules and regulations with the SEC and issuing crypto guidance. I think it has a little more relevance today, right, than it did when we first talked about it a couple of weeks ago. Anyone want to field that call?
I would start with the TK Jets letter. We were talking about it briefly. I think Michael Turpin commented on it. When I read that letter, I was like, oh my God, this is a disaster. Because basically what it says in the letter is if you have a constrained program like mileage points, like has existed for decades, and you call them tokens, you're okay. And I was like, that's not going to do it. And but then I read the rest of it, and the rest of it is a fairly straightforward, concrete, assessment with reference, in my read, with reference to the Howey test that really lays out for the first time in writing. They've talked a lot about it, but in writing, that a utility token. Is a definition of a utility token, which is pretty workable, at least from our standpoint.
Elixxir might be a benefactor of that, definitely.
Yeah, I think so.
I think before April 3rd, correct me if I'm wrong, but before April 3rd, there was no such thing in the United States as a utility token because it had not yet been defined. And there was so much differentiating as far as opinion on what it would be or what it wouldn't be.
Yeah, my comment on this would be, I think overall just issuing this statement is a positive step because I think uncertainty is a killer of motion. It's a killer of innovation. It kind of keeps things frozen. So yeah, despite not being a ruling, it still provides some clarity as far as what they're thinking, and hopefully, it brings value to people who actually want to build value in the crypto space.
And it gives some credence to moving forward into digital assets, is what we're talking about today.
Can I just flip shot one thing in though?
Sure.
In the TK Jet.
Hang on a second. Let me ask you a question. Could I possibly stop you?
In the TK Jet letter, no. The TK Jet letter had this. The thing that really chilled me when I read the TK Jet letter is they basically have these, because they're like mileage points, they went to great lengths to make sure that they would always be the same value. And in there is that effectively it's a hardwired stable coin type thing, that it can never appreciate in value in the TK Jet implementation. It's tied to the US dollar. And that's been a big issue, and it goes to number 2 in the Howey test, which is if people can make money off of it, if it can go up, that's trouble, right? If you read in the discussion below the TK Jet letter, they do make this distinction, which is that it's not that it can't appreciate in value. That is not determinative. It can go up in value if it's the result of growth in the economy, and there was one other factor. And to me, that was the huge kind of like cleaving line, that you can have a token which is part of a token economy, where there are token economics, where if people do things in a decentralized way, it can appreciate in value. That can all happen, and it cannot be a security. And that matches very well with what we're up to. So, we had a parochial self-interest in it, in the fact that they laid it out like that.
And we're looking for great things from Elixxir, and thanks for that comment. So we have the SEC has come down and give us basically the anti-Howey test, right? So we have the Howey test, we have the anti-Howey test. Now as investors, we can begin to make more educated, better decisions as to where we place our efforts and our money and our time in moving forward in this thing called blockchain, which is much more interesting. So we basically had what? We had ICOs before, right? 2017, 2018. What did we learn then? We learned two things. We learned that number one, that the capability of mankind to lie, cheat, and steal to one another is almost unlimited, right? We learned that, right? Very creative ways to
know.
Yeah. Yeah, it's good to know. Very creative ways to lie, cheat, and steal. We also learned that the capability of Joe Plumber on Main Street to invest in equity investments at 1,000, 500, whatever a time, very quickly outstripped the entire VC industry. If we had let it go for very much longer, it outstripped the entire VC industry and private equity industry. So I think we have tremendous pent-up demand on Main Street, not Wall Street, for these types of securities, these types of digital assets that we're moving into. 2019 will be the year of the STO. So we know what ICOs are. I don't think we need to belabor the process. And we kind of understand what the Howey test, anti-Howey test, and why the SEC got involved. And now they're giving us some guidance. Very good stuff as we move into these things called STOs. So let's talk a little bit about STOs and what they are. And STOs from an interesting perspective, because we have private equity and venture capital in the United States. We have onshore and offshore European and investments and we have someone who's building a platform based in the United States and is going to be working in these different things. Very interesting, different perspectives, I would assume, on STOs. So, Jeremy, you want to start us off?
Yeah. So STOs, they are an issuance of a security token, which investing in such a token is an investment in some underlying asset. That could be real estate, stock, commodities. We're talking about assets that have been, investors have put their money into for a long time, but now being able to do that on the blockchain. I think STOs are a great option for companies that are considering doing an IPO, because they're a lot more cost efficient, they're a lot faster. They provide direct access to retail investors, as Michael was alluding to, and they create a digital asset that is tradable 24/7 because the markets never close. There are a lot of middlemen that go into the process of putting together an IPO, and essentially you can think of that as people who serve different functions to provide the security that is inherently provided by a blockchain anyway.
Provide friction.
Provide tons of friction. But I think in terms of thinking about STOs and ICOs, security tokens and utility tokens, a security token is an investment in some perhaps real-world asset that's being digitized on the blockchain. Investing in a utility token is purchasing an asset that you can use to access or operate some kind of system or network. So you can think of that as, for example, Filecoin, where if I own Filecoins, Filecoin is a distributed file storage network. So if I own Filecoins, I can use them to purchase storage space, kind of like the way I would use iCloud or Dropbox. If I own that coin, there is a utility value to that token. Whereas if I'm buying a security token, which is perhaps, let's say, for example, an ownership stake in an apartment building, if I own this token, I am the provable, verifiable, rightful owner to 2% of this building, and I can trade that at any time.
I wanted to mention that there's nothing wrong with the security. Nothing wrong with an IPO. some of our favorite companies.
As long as you do it correctly.
Yeah. The issue is, there are rules. There's nothing wrong with following the SEC rules. There's things called 10Qs and 10Ks, and I think people know 10K is an annual report, and they're disclosure rules. And the history of that is, dates back to 1929 for the most part, but there are various, updates. But basically was that if you have a business and you have investors and they're trying to value the business, they should be able to see what's going on in that business because they own a part of something, this equity, which is quite abstract. The only way to know what it really is to know what's going on in this business. So there had to be some rules for how to disclose it. And all the exceptions to the rules, Reg D or whatnot, are in the vein of sophisticated people, rich people, people who are capable of understanding these things without those formulaic disclosure requirements. So the reason I want to mention this...
Just a quick question. These are
Yeah.
the same people that valued Shearson Lehman American Express in 2008 at several $1 billion, and it went defunct several months later. The same processes, the same people?
Yeah.
Okay, I'm just making sure. I'm
you make an
confused on
excellent
that. I'm not the sharpest
They're the
knife
same
in the
people
drawer.
who thought GoPro was worth $12
Yeah, okay,
billion.
yeah,
Yeah, and now it's worth $800 million. And they're, so the reason that this is important is that there are certain things which are a little bit more simple. I mentioned a mutual fund earlier. Mutual funds are securities that you can buy, and what they are is a portfolio mix of other securities. And the way the disclosure is handled for a mutual fund is you publish which securities are in that fund, and you publish the prices daily, and that's enough. So that they meet the disclosure requirements there without having to do very much. There isn't a lot of filing long-winded written documents and so on. So there's a lot of, and that's true with REITs, for example, real estate investment trusts. So there is, I think, a lot of room right now with the security token offerings to have things which are securities without creating a lot of disclosure burden that you would if you were running an operating company. And so we'll see people moving forward with that, without having that friction.
I'm not quite sure what's happened, but I think we've had a shift in the time continuum here. Because I've been told we have a minute left. That was the quickest 35 minutes I've ever had in my lifetime. So we're going to have to wrap up here really quickly. I wanted to have some questions, but I want to let you guys know that we'll be available in the audience. We'll be here all day, to chat with you. If you have questions about digital assets, this is a very important thing going into 2019 as we're beginning to do these different things in regulation and supporting and trying to support investors and support economies and support entrepreneurs, growing companies, and doing fundraising in the United States. Let's shameless plugs. Anyone?
No, I mean, we could take one question and then.
I think we have less than 30
have less than
seconds
that?
left. I don't think
All
we
right,
can
sorry.
answer.
Who's the lucky one?
Go ahead.
Go ahead, sir.
What do you find the most popular offering happening in the marketplace today within the U.S.?
Where do we find the most popular types of offering in the U.S.? That's going to be another 35-minute segment that we're going to do, basically in 2020.
I would say wait for the next SEC letter.
Yes, definitely.
Zcash, maybe.
Zcash is interesting.
Zcash on Gemini.
Jeremy? Yeah.
I mean, I think it's still Bitcoin and Ethereum. I mean, that's what people are. That's
I'm
what people
so
are looking
with
at.
Jeremy on that one.
So.
I'm
The
totally with him
and especially
on
in
that
a bear
one.
market, people are looking at the established incumbents that have de-risked to some extent.
They've definitely been de-risked. There's definitely some investment potential there. I happen to think that STOs are the next thing in the United States. If you're going to do an STO, then fundamentally you have to have a base security. In the United States, securities are Reg A, Reg C, Reg A+, Reg D, Reg CFs. Look at those types of people that have companies that are doing blockchain kind of stuff. Because and we didn't even get to talk about exchanges, which exchanges are coming, and exchanges are the things that are going to provide the liquidity for these digital assets. So that's really when the thing is going to hit, is when we have exchanges. And a lot of people think this is going to happen in the next 6 months to a year. So if that happens, then all bets are off. Fundamentally, we're heading into a big shift. And blockchain technology works 1,000 times quicker, 100 times less expensive. No one can do it. PayPal just said that they would be investing in blockchain. I mean, there's all kinds of things happening, and it's a good space to be in. Thank you for being with us. Thank you for
Thank you.
for Crypto BlockCon. Thank you, JC. Thank you, Waco. Thank you, everyone. Thank you so much.
Thanks.